Is this a real soft patch or just a valuation reset in the market? Here to discuss are Bianco Research President Jim Bianco and CNBC senior economics reporter Steve Leisman. Jim, I'll turn the mic to you first as the practitioner. Under what conclusions are you investing in right now? Do you think this is a soft patch?
It's hard to say whether or not it's a soft patch or if it's indeed that expectations for a strong economy rose so much that it's been easier to disappoint. And I tend to think it's a little bit more of the latter. Of course, the economy goes up, the economy goes down. And right now, I don't see it meaningfully declining.
So, Steve Leisman, let's kind of first turn to you to back that up. We've seen some of the retail data a little bit weaker. Obviously, we've had anecdotal reports like Walmart's reduced guidance. How would you kind of summarize things?
Well, first of all, just to note, people, this is a pretty big week. We have some retail earnings coming out this week that we'll be watching carefully to see if there's a follow-up on Walmart. There was some colder weather in January, Kelly, as you know, that might have hurt retail. But, you know, it's one of those things where it's like you don't ignore it and you don't panic on it. You watch it and you say, OK, this is something worth watching. The interesting thing, of course, last week that everybody was talking about was the University of Michigan sentiment numbers, which showed a decline. I don't think the sentiment has much to do with sales at the end of the day, at least certainly on a month-to-month basis. But watching those inflation indicators was interesting to me. They ticked up, and Michigan said, hey, people are mentioning the tariffs. So it's really interesting to me that the tariffs are so pervasive out there in the economy among the general public. We see them having an effect on businesses right now. So whatever President Trump is trying to do for the positive for the U.S. economy, I think he has to be conscious of the process and how it's having an effect. It's been dragged out. You remember we were in 2 weeks ago on a Sunday when the tariffs were threatened, and then they didn't come. So now we're facing additional deadlines in March and April. So right. The process looks to be having an effect on the economy here.
Jim, let's talk about the 10-year for a minute, because if we were, looking, we're below 450, we're almost below 440 right now. It'd be a great development if it wasn't accompanied by some of these soft patch concerns. So if you can put them at bay and tell me that long-term yields are falling because we're fixing the debt problem or something, I'd feel much better about that.
Yeah, I'd like to be able to tell you that that's the case, but unfortunately, if you look at the 10-year yield, basically since the election, November 15th, it was at 448. Today it's at 441. So it's broadly been churning sideways, although technically it has declined for 6 weeks in a row. And I don't suspect that we're going to see much more in the way of downside on the 10-year. Now, it could continue to go sideways for a little while longer, but I think if we were to see an uptick in the economy, some kind of stimulus package from the Trump administration in the form of extension of tax cuts, deregulation, and the like, right, that you could see those yields moving up. And I wouldn't be afraid of that. And I don't think we should. I mean, the idea that, oh, God, the 10-year is going towards 5% and that's somehow bad is predicated on the idea that we've got a weak economy that can't handle it. But if we have a stronger economy, that should not be a problem for the stock market and the economy. It should be a sign of its strength.